Welcome back to another trade setup from GPT Traders. This time we're looking at the pound yen pair. Yes, we are now looking at forex setups because the crypto market isn't really doing anything. It's moving sideways, so much discussion has taken place within our Discord to open up and now track different markets, and forex is another market that's open 24 hours a day during the weekday, so it's closed on weekends. It's not like the crypto market, but from a trade perspective, the candles always tell us a story. I have got some levels marked out here, and I'll take you through why we have marked them out. But before I do, let's adjust this chart so that we can actually see why we've marked out those levels. We could have marked out, the local bottom here, and then that gives us a range. We can see another area of interest around here, and then if I were to continue drawing, what you can see is I'm drawing zones for each time where price has reacted and has gone higher, because we are clearly in an uptrend at the moment. So if I extend this to the left, we want to see where price has reacted, and as you saw me draw this zone, I'd only extended it to here. If I take it right to the left, you can see prices reacting here, burst through and then came back down and then reacted here as well. But we're not particularly interested in the zone. That was more of an illustration to show the zones of interest and how price has reacted. So I will get rid of those. I'm just practicing to show you guys how and why areas of interest can be identified, and I want to justify that with zooming into this latest area of interest. So we've always used the daily time frame to mark up price charts, and we have looked at this zone of interest because price has burst through this area and now it's coming back down. But what made this an actual area of interest? Again, if you extend this to the left, you can see that price has always reacted in and around this zone. So we can see that there's a high probability that price is going to do something here. It's either going to break down or it's going to break up. So let me just illustrate that again with the brush. Price is reacting in this zone. It's gone up, come back down, reacted, 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 broke down there, and now it's come back into this area. So having said that, price has broken out, it has now retraced, and we are observing how price is going to move now that it has done that previous breakthrough, this previous area. And if you see at the top, you can see it again reacts to an area of interest. Price ranges 70% of the time, and it's these ranges that that's a terrible line. It's these ranges that we actually want to be or can trade in. Therefore, this is a potential setup that we could actually take. Daily time frame, we always draw the trading structure, but it's on the 4 hour that we're most interested in terms of taking the trade. Oops. Now let's break this down a little bit. So we've seen price reacted in our zone of interest, and we've given the trade a nice breathing room in terms of a stop loss and a potential take profit area. As always, we look for a 1 to 3 minimum trade setup, and on this case it's 1 to 3.44. Now if I were to measure it in terms of our entry point, so price is a little bit lower than our entry point, this is a 80 pip stop loss, and this is the kind of range that you want to be aiming for a 4 hour trade. You don't want to have a 10 pip or a 20 pip stop loss, because forex pairs do range throughout the day. So right now we're just beginning the Asian session as we're recording this, and then as in crypto, forex markets are 24/7. Actually, it's 24 hours a day, 5 days a week. So unlike crypto, it's not 7 days a week, it's only 5 days a week, but the markets are open around the clock, and they shift from time zone to time zone. Therefore, we want to give the trader room to breathe, because as we shift from different time zone, price is going to react depending on the forex market and how that's going to behave in the different regions. But from a trade setup perspective, 80 pips is the kind of ideal risk area to let a trade breathe, and our profit area is looking at 282 pips from our entry. Now again, we're not really want to be focusing on the pip count, but what we do want to be focusing on is the risk to reward, and that does give us a good risk to reward setup here. We've gone for a conservative risk to reward. We could have gone here as an early take profit zone, but this is only a 1-to-1, or and that's not good from a trade setup perspective. If price breaks here, we definitely want to be setting our trade to break even. That's because we've had a change of structure, and price would go up, and then essentially looking at our take profit zone. So that is our trade setup for the pound yen pair. Let's quickly look at the 1 hour just to have more detail on the charts, and you can see it's very much the same setup there, just with a little bit more detail with the smaller candles. We are anticipating price to recapture this liquidity area here, and then break up and continue breaking up to our target zone. Hopefully you found this useful. Try to give you as much context as I could in terms of why this is a valid trade setup, and providing the stop loss or potential stop loss and take profit zones. Do join in the discussion in our Discord. See you on the inside.